UK, Reeves paves the way for broad tax rises to avoid a return to austerity. CEOs of Morgan Stanley and Goldman Sachs have cautioned that equity markets heading towards a drawdown. And Bitcoin falls to a 5-month low at 3.1% to $103,539. This is the Economic Bulletin here on Qnews with me, Henny Saif, and we'll start off with Europe, as the British Finance Minister Rachel Reeves has paved the way for broad tax rises to avoid a return to austerity, framing her second annual budget as one of the hard choices to protect the public spending while reducing Britain's debt. She reaffirmed doing what is necessary, not popular, to protect the country against high inflation and high interest rates, as she weighs whether to increase taxes at the November 26th budget. Reeves also again indicated she wanted to create headroom between tax receipts and spending commitments.
In third countries, including India and China. In the budget and beyond, I will continue to drive for more productive and more efficient public services right across government, making savings and rooting out waste wherever I find it. My commitment to the fiscal rules is ironclad. The alternative is to row back on those investments, to return to the cycle of austerity and decline, which is what got us here in the first place, passing the cost of government failure onto communities and families, stifling our economic growth and weakening Britain's foundations in an unstable world. I will not repeat those mistakes.
For more on this, we're joined from London by the economic and political analyst, Mr. Babak Imamyan. Mr. Imamyan, welcome to the Qnews Economic Bulletin. How does the government plan to balance the need for broad tax rises with the risk of slowing economic growth in the current high inflation and interest rate environment?
Well, before we get into the economic side of it, the political side of it is I cannot see Rachel Reeves being in the same position this time next year, because this time last year she came back, she broke a manifesto pledge, an election manifesto pledge, that she would not raise taxes. She did that last year, and she said she will never do it again. She's come back this year. She would definitely raise taxes on 26th of November. I cannot, and we know with a slow economic growth, there will be a shortfall next year also. And even the shortfall might be more than 20, 30, even up to 50 billion. So next year we'll have the same scenario, but it cannot be the same person. So my prediction is we will have a different chancellor this time next year, but it will be so disastrous that I predict we will have an early election in 2027. So that's the political side of it. On the economic side of it, the problem is, which I hope we get into it, the government is not addressing the causes of slow economic growth. They're not addressing that. The reason why they're not addressing it, because they don't know the causes. They are not familiar with the causes. And even if you tell them what the causes are, they don't have a solution for them.
Well, then what specific tax measures are under consideration to create the fiscal headroom Rachel Reeves mentioned? How might those impact the income groups and businesses, different income groups?
Generally, any tax rises means people would have less money in their pocket. And she's saying this is a budget for growth. It is like I saying to you, by taking money out of your pocket, I'm making you richer. No, it's the other way around. If I put money in your pocket, I make you richer. So this slogan, budget for growth, it just doesn't make sense when you're taking money out of people's pocket and you're telling them you're growing. Obviously, there are three ways they could tax: is VAT, is the income tax, and national insurance. These are the three areas that she would be. Most probably it'll be income tax. I don't think she will go for VAT. It'll be mostly on income tax, and then it'll be mostly on the higher incomes, on the wealth makers. And the wealth makers are leaving this country anyway. So this time next year will be even less wealth makers in the United Kingdom, and there'll be even less money for the government.
Well, she spoke about increasing the taxes so as not to get back to austerity of before, but how does increasing taxes differ from the previous austerity measures? What lessons has the government learned from those earlier periods then?
Well, I have a bias. I am a member of Conservative Party, but I would declare that, in my opinion, George Osborne, the Conservative Chancellor between 2010 and 2016, was one of the worst chancellors we've ever had. He introduced austerity, which was absolutely wrong strategy. When he was declaring austerity for United Kingdom, China was investing $100 billion dollar a year in its infrastructure. And they had a plan of 5 trillion to invest 5 trillion into their infrastructure. That's why the economy grew. So what I'm trying to say is, by referring to austerity, this is like long time ago. How far does she want to go back? And this is just an excuse. The reason why she brings up past like 15 years ago, 16 years ago, is because she has, again, no solution. And it's very simple. All she has to do is seriously start deregulating and having an energy policy. The reason why we cannot attract inward investment because our energy costs are too high. If we had a proper energy policy where we could offer plenty of access to plenty of cheap energy, then we would attract a lot of manufacturing, a lot of industrial companies coming to UK, and also generally the inflation would drop. And once the inflation dropped, the interest rate would drop. But then when you mention that, it just goes over their head. They have no idea what is an energy policy, except net zero, obviously.
Mr. Mamian, what are the key then risks to public spending if the government fails to increase the tax revenues sufficiently, especially in sectors like healthcare and social services?
Well, the point is, you could cut public spending, but then there is so much you could cut. The issue is growing the economy. Her whole speech was about how she was going to raise money through taxes. Hardly she mentioned what is a strategy to improve the economy, to have a high growth economy. She didn't mention that at all in her speech. And the whole entire government has no idea how to grow the economy. So going back to public spending, you could cut back some of the public spending. Obviously, we have a very generous welfare system that could be addressed. But then much easier it is to grow the economy. And it doesn't take that much to grow it. You only have to look at what President Trump is doing to grow the economy. He's going around the world, attracting foreign investment into US, offering them access to plenty of cheap energy, deregulation, and also access to a large market and everything else. But you hardly see this government doing that.
Well, you've alluded to the the American and the international trade and trends, but given the global pressures on inflation, also in the US, and supply chains, how will the UK budget address both domestic economic stability and the international economic uncertainties?
Well, the instability, it comes from low economic growth at 1%. And the deficit, the shortfall in the government is 5%. So there is a minus 4% that government is having a shortfall every year. So that is being added to the loan. Again, I go back. It is to grow that 1% to 5, 6, or even 8%. And for that, the way to do it is actually by the regulation. I mean, cutting back 80% of regulations, going to basic only 20%. And that's the best form of tax cut you could give to businesses and allow businesses to grow, set people free. The problem is people on the left of politics, the governments, they think they know better. And they have so many regulations in terms of consumer protection that take your freedom and my freedom away. And they tell us what to eat, how to travel, what to do, what to wear, and how to spend our money. And that's not a free world. And everyone thought this was sorted out in 1980s, that market economy is the king. But again, we get backdoor to socialism through regulations. Regulations means communism and socialism. That's what it is.
Well, then, how does the government plan to communicate these hard choices to the public to maintain the trust and the social cohesion during potentially a very difficult economic adjustment?
Well, thank you for your question. You mentioned the word trust. Right now, there is no trust. As I mentioned, there is no. Rachel Reeves has lost a lot of credibility last year. She lost a lot more credibility today. And I don't think she can continue beyond 6 months. So that's the way I see it. And once a chancellor loses credibility, that's 50% of the government. And I don't think they have solutions. Even the next chancellor, I don't think they have a solution because they're not committed to these changes. To have a, they're not even committed to have a energy policy right now. They're still committed to net zero. They talk about it that they want to remove it, but they never remove it. So we still are paying so much for our energy. So they're not committed. They're not serious about it. They're more interested about politicking. And also nowadays, it's all about short-term policies. They come in, they have a plan, they stay in office for 2 or 3 years, they make a name for themselves and they go. Otherwise, they don't have a mission like previous generations of politicians where they were on a mission to improve the society.
From London, that was the economic and political analyst, Mr. Babak Imamyan. Mr. Imamyan, thank you very much for your insights. Back to our news, still in Europe. Norway's Sovereign Wealth Fund has stated that it will vote against Tesla CEO Elon Musk's proposed compensation package, potentially worth $1 trillion at the upcoming annual meeting. The fund will also oppose Tesla's general stock compensation plan, which covers all employees but could also benefit Musk. In response, Tesla stated that Musk will earn nothing unless the company's market value rises significantly, with the full award granted only if it reaches $8.5 trillion, nearly 6 times its current value.
In the option selection, you'll be able to...
On bilateral relations, Chinese President Xi Jinping has called for deeper mutual investment with Russia and reaffirmed Beijing's commitment to strengthening ties despite the turbulent external conditions. Both countries also pledged a joint response to unilateral sanctions. He highlighted industries such as energy, agriculture, aerospace, digital economy and green development, where the two countries could advance cooperation and foster new engines of growth. For his part, Russia's Prime Minister Mikhail Mishustin affirmed that it was important for both sides to continue creating favorable conditions for attracting mutual investment and supporting joint projects. In Asia, Japan has launched an economic strategy headquarters to boost growth through public investment in key sectors such as semiconductors and defense. While no funding details have been disclosed, 17 industries, including AI, shipbuilding, aerospace, and defense, were designated for targeted investment. Prime Minister Sanae Takaichi instructed relevant ministers to draft public-private investment roadmaps outlining plans, timelines and targets, which will form the basis of a new growth strategy to be finalized by the summer. On another note, the Prime Minister, Sanae Takaichi, stated that Japan has yet to achieve sustainable inflation supported by wage growth, signaling her preference for a cautious approach to interest rate hikes. She noted that while consumer inflation remains near 3% due to higher food prices, Japan is only halfway to achieving stable, wage-driven price growth. Takaichi expressed hope that the Bank of Japan would pursue policies to reach its 2% inflation target sustainably. She added that her government would strategically use fiscal spending to boost household incomes, consumer confidence, and overall economic strength.
경주선언으로 APEC 회원 간 협력을 복원했으며 AI 이니셔티브 및 APEC 인구 구조
Thailand's central bank will enhance due diligence monitoring and prioritize the investigation of suspicious transactions, including at commercial lenders, as Southeast Asia's second-largest economy struggles to tap down online scams. Now, the bank governor noted it will also strengthen the supervision and inspection of financial service providers, including money transfer agents and currency exchanges, and probe certain gold transactions. CEOs of Morgan Stanley and Goldman Sachs have cautioned that equity markets could be heading towards a drawdown, underscoring growing concerns over sky-high valuations. At the Global Financial Leaders Investment Summit in Hong Kong, Morgan Stanley CEO Ted Pick stated that the possibility of 10% to 15% markets drawdowns should be welcomed, noting that such declines would not necessarily be triggered by any major macroeconomic shock. For his part, Goldman Sachs CEO David Solomon highlighted that while market cycles can persist for some time, shifts in sentiment or perceptions of growth can trigger downturns that no one can predict until they actually happen. The European Banking Authority has reported that European banks increased their reliance on US dollar funding in 2024, heightening concerns over potential risks if dollar liquidity tightens. Dollar-denominated funding, including deposits, rose to 13.1% of total funding in December 2024, up from 12.4% a year earlier, while exposure to dollar assets grew to 23% from 19.3%. The EBA noted that subsidiaries are ramping up their dependence on dollar funding faster than their parent banks, particularly through securities financing and unsecured wholesale funding. It also warned banks to manage currency mismatches and noted that some EU lenders have net stable funding ratios below the 100% minimum in foreign currencies, including the US dollar. Bitcoin dropped to its lowest level since June, extending losses amid ongoing weakness across the cryptocurrency market following last month's major crash. The world's largest digital asset fell 3.1% to $103,539, its lowest price since June 23rd. As sentiment across the sector remains fragile. Cryptocurrency have struggled to regain momentum after roughly $400 billion was wiped from total market value in less than 24 hours last month, one of the most severe declines in crypto history. Global markets showed collective declines across almost all indices in the United States. The S&P 500 was down 0.74%, the Nasdaq Composite went down 1.26%, and the Dow Jones Industrial Average slipped 0.36%. In Europe, Germany's DAX went down 0.87%, France's CAC 40 fell 0.65%, while Britain's FTSE 100 inched up 0.06%. Across Asia, Japan's Nikkei 225 plunged 1.74%, China's Shanghai Composite slid 0.41%, and Hong Kong's Hang Seng shrank 0.79%. Egypt's Ministry of Petroleum has launched a new international tender for 4 Red Sea exploration blocks, aiming to attract foreign investment and boost energy output. The bid, announced by Minister Karim Badawi, uses a profitability-based production sharing model, the R factor, offering more flexible terms for global energy firms. Libya's state-run Oil National Corporation has announced a new oil discovery in well H1NC4 by its subsidiary Arabian Gulf Oil Company in the Ghadames oil basin. The company stated that the well's daily production is estimated at approximately 4,675 barrels per day of crude oil and approximately 2 million cubic feet of gas. It added that the project is wholly owned by the NOC. Oil prices fell more than 1% on Tuesday as the OPEC Plus decision to pause output hikes in the first quarter of next year, along with weak manufacturing data and a stronger dollar, weighed on the market. Brent crude futures fell 1.25% to $64.08 a barrel. The U.S. West Texas Intermediate crude was down 1.38% at $60.21 a barrel. Gold prices also fell more than 1% on Tuesday as the dollar hit 3-month highs, while traders awaited U.S. economic data for clues on the Federal Reserve's monetary policy path. Spot gold was down 1.1% to $3,959.56. The U.S. gold futures for December delivery eased 1.1% to $3,968.1 an ounce. The dollar index traded at 3-month highs, making gold more expensive for other currency holders. China's Ministry of Commerce has urged the Netherlands to stop interfering in corporate affairs and seek a constructive resolution to the Nexperia dispute. A ministry spokesperson warned that failure to act would worsen the impact on the global semiconductor supply chain, an outcome neither China nor the industry wants. China called on the Netherlands to act responsibly to preserve stable China-Netherlands and China-EU trade ties, while reaffirming its commitment to protect Chinese companies' legitimate rights and ensure the smooth operation of the global chip supply chain. Artificial intelligence cloud startup Lambda has announced a multi-billion-dollar agreement with Microsoft. The deal includes the deployment of tens of thousands of AI chips, leader NVIDIA's graphics processors. However, Lambda did not provide further details on a specific deal value or timeline for the deployment in its statement. Senate Majority Leader John Thune has expressed optimism that an agreement can be reached this week to end the 5-week shutdown, as bipartisan rank-and-file talks make progress. He noted that the goal was to be able to send a revised stopgap bill to the House by the end of the week to reopen agencies. In her first public appearance since President Donald Trump moved to dismiss her, the U.S. Federal Reserve Governor Lisa Cook stated that public service in the U.S. requires thick skin. She pledged to uphold the mandate given through her Senate confirmation to protect the Fed's inflation and employment goals. In the MENA region, the Central Bank of Egypt reported a financial stability index of 0.48, with foreign reserves rising to $47.8 billion, enough to cover more than 6 months of imports, noting that Egypt's financial system remained stable in early 2025, supported by a solid banking sector, rising reserves, and stronger investor confidence. However, non-performing loans declined to 2.2%, while banks maintained capital adequacy and liquidity ratios well above regulatory requirements. Profitability improved, with returns on assets and equity reaching 2.6% and 39% respectively. Foreign investment in Treasury bills increased to 44.7%, and the EGX 30 index rose 19.5% year-on-year. Stress tests confirmed the sector's resilience, and financial inclusion expanded to 74.5% of adults. Turkey's Statistics Institute has reported that inflation eased to 32.87% year-on-year and 2.55% month-on-month in October, both below expectations, a development that could support the central bank's plan to slow, but not halt, its rate cuts. Consumer prices in the key food category rose 34.9% annually and 3.4% monthly, while housing costs surged more than 50% year-on-year, and clothing prices jumped 12% month-on-month. Producer prices increased 1.63% from September, bringing the annual rise to 27%. That brings us to the end of our economic bulletin. Here's what we've been covering. UK's Reeves paves the way for broad tax rises to avoid a return to austerity. CEOs of Morgan Stanley and Goldman Sachs have cautioned that equity markets heading towards a drawdown. And Bitcoin falls to a 5-month low at 3.1%. to $103,539. These are all the economic and financial news we have for now, but please don't forget to follow Q News on YouTube, Facebook, X, Instagram and TikTok at Q News EGY to stay informed. I'm Henny Saif. Thank you for watching.